What's up, everybody? Jake coming at you from ORS SGt&x with an idea on how to combine fixed ratio scaling by Ryan Jones and combine that with our risk smoothing, or our target smoothing. In this case, we'll call it risk smoothing. So our fixed ratio here is going to be $50, and our max drawdown, max losses in a row, is 6. So at our first risk level, which is $100 per trade, our max potential drawdown is $600 based on our historical data. Then the next level up would be 150. Then the next level up would be 225, and we arrive at these numbers simply by taking the previous risk level divided by 2 plus itself. So over here you can see 100 divided by 2 equals 50, plus the 100 is 150. Over here 225, so 150 divided by 2 equals 75. The 75 plus the 150 equals 225, and so on. And we can notice that our account balance versus our max drawdown potential with this particular fixed ratio of $50 is somewhere between 25 and 35% of the account, with the max drawdown potential of 6 losses in a row. And each trade based on the account size is somewhere around about 5%, maybe or so, on average of the account. So we can scale to the next level after we've had 6 net wins. We have to scale back to the previous level if we have 3 net losses. That can happen in a row. It could happen, in sequence. It can happen out of sequence. Doesn't really matter. But if in this block, this scale level block, if you have 6 net wins there, then you go up to the next block. If you have 3 net losses there, then you got to go back to the previous block. There is no previous block besides the 100, but you could make one for $50, I suppose. So how would that look on the way to getting to the next level? So we'll just say that a 1 is a win, a win, a win, a win, a win, and a win. Say we had 6 wins in a row, well, then we're out at the next level. Well, say it didn't work out like that. Say we had a win and then a loss. Okay, so that's 2 net wins and 1 net loss. So if we got a win on the next one, then we go to 0. Killing mosquitoes. Then we would go to 0 there. Then we'd have to get another win to give ourselves a 1 there. Then say we have another win, and then we have a loss. Then we have another loss. And well, shoot, we're getting close there. So okay, so now we have a win, and we're back to 0 on that one. And then we have another win, and we're to 1. So now we have 5 net wins, and we need 6 though. So then we have another win. So we take that -1 to a 0 to flat. Then we have another win. And then that is a total of 6 wins, and we're allowed to go to the next level. And that just continues down, up and down. But we can see over here that based on our fixed ratio account balance of almost $11,000 at the end of 35 net wins, it's almost double what no scaling would be if we just stayed at $100 the whole time. And we know from our back testing we can get somewhere between 20 and 30 wins per month. So it's possible that in a month or two you could take a $3,000 account fairly safely to $11,000, $12,000, something like that. And what's really cool is once you start getting up into these higher risk thresholds, these higher risk per trade thresholds of the 500, it really starts to climb up. So like right here between level 1 and 1, 2, 3, and 4, there's only like an extra $800 that you would have made. Like the beginning of level 4, the end of level 3. But once you get in the middle of level 4, level 5, it starts to get a little bit more exponential. And we can kind of see that here on our fixed ratio account balance graph up to almost 12,000. versus our non-scaling account, which gets to about 6,000 or so. Yeah, 6,000. Anyway, that is about as short as I can make this video, and let me know what guys you think. And eventually somebody can design a spreadsheet that actually works. Maybe we can come up with a really cool way to make this all work. But I've been thinking about this for a long time, and this is as close as I've gotten to getting something that I think might be actually viable as far as a scaling plan, incorporating that smoothed risk target factor that we use every single day. You can't really do it like the regular Ryan Jones method. I've been thinking about how to modify it, and I think this actually works. So we can hear just real quick our max drawdown potential. This is 25 to 35% of the account size on average. This versus this. This versus this. So it's pretty cool. I don't have the rest of the stuff filled in here. Anyway, let me know what you guys think. Okay, later.